Hello everyone, George DeSantis here with look at the market for the week ending February 28th, 2020. Actually, I'm doing this early on Monday morning. It's not 10 o'clock yet. It's not even 10 yet. Um, didn't get a chance to do it on the weekend, but I just thought I'd do it early today. And before we begin to look at charts, etc., let's bring up the disclaimer. Just take a look, read it, realize I'm not trying to give any particular person advice because I couldn't possibly do that, not knowing what your financial circumstances are. And therefore, the reason for this is simply for my purposes to take an overall view and to take a look at some individual stocks. And I make a video and put it up there on YouTube, and anyone can take a look at it. And you still need to do your own research and make your own decisions, of course. So let's begin by taking a look at the weekly chart of the S&P 500. So here's a weekly chart of S&P 500. Um, well, as usual, I like to take a look at the moving averages, and you can see that the 4 exponential moving average made a high here. We did have a bullish Arami, but then it fell apart last week, and last week we had a big bearish bar. Of course, everyone knows that. And we ended up just hitting the 100% retracement of this trend here from October. From this October low to this February high, we gave back exactly all of the gains of last week. Um, so, we are seeing here a bit of a shadow of this candlestick. So the market is attempting to find support here. And as I type, the market is up about 250 points or so. The Dow, S&P up 28. So market is trying to make an attempt here to recover. I don't know how, we'll discuss more when we take a look at the daily chart. I don't know how successful that will be for now, but we'll get to that. Um, let's take a look at some of the other things we find. You know, the parabolic is now above the most recent bars. This is today's bar. It's printing the first bar of the week here. You know, the first week's bar, and first bar of this week, I should say. But the parabolic is still above the most recent bar. So it's indicating the downtrend is still intact. And we could see here that MACD is fallen below the zero line, so the bears are in charge. No surprise there, given all the news with the virus, etc. Williams percentile broke below the magenta line. Excuse me, let me take a cough here. Okay, just needed to cough. I still have a bit of laryngitis. These things linger with me for quite a while, as some of you know. But I'll do this. So we are seeing here that the sum of the rate of change indicator also dipped below the 4% line. And that is the first time it's done so since it crossed above the 4% line here back in, what is that, late October. So this is insofar as the weekly chart is concerned. We are seeing that we have a downtrend according to parabolic, but we also have possible support here at 3 standard deviations and 100% retracement. So we need to take a look then at the, so that's conflicting signals. Let's take a look at the daily chart. On the daily chart, first thing you can see there's 4 EMA, that's yellow line, cross below the 9 EMA, which is the red line. Now, you can take many signals for selling. This is one of my sell signals. So I was selling way back here. Okay, I told you that I was selling half my Apple position and then I sold the other half. Because this is, to me, this is one of my best sell signals. If the 4 crosses below the 9 EMA and or I am down more than 6% from my purchase price, I am out. No questions asked. Stick with it. So that's where I started selling. Now, MACD you could see was falling apart, okay, crossed below the zero line. All these other 2 indicators fell below their key levels. So the market fell apart here. We retraced that 100%. You could see that it just touched the 100% retracement, and we seem to be rallying today from that level. Now the big question is this a fake rally, or is this going to be something that takes us even higher to regain much of what we lost here? No one really knows. I'll make a guess. So in order to answer that question, let's take a look at the Ishimoku chart. This is the Ishimoku cloud here, and you could see that the market broke through the cloud and hit that 100% retracement. Today it's attempting to rally, but the general approach with the Ichimoku cloud chart is that when you want to be buying the market when we're above the cloud, as we did here in October. Okay, we want to be buying the market, and when we are below the cloud, we don't want to be buying the market. Now you might say, well, yes, George, but what happens now? What am I going to miss this rally all the way back up here? Are you telling me I shouldn't own anything between this level and this level, or even higher? I'm saying I don't care to pick the bottom, because I'm not that good at picking a bottom, and I don't know who is. And even if we rally up here a bit, we are likely to find some overhead resistance, because those who didn't sell, as I understand it anyway, those others could correct me, but those who didn't sell on the way down and are saying to themselves, Jesus, why didn't I sell here? Why didn't I sell here? Or even here? If they get an opportunity to sell, if the market comes back up here, they're waiting to sell, and that gets the market back down to test this low. So that gives us a double bottom. I believe that's what we're going to see. We're going to see a test of this level here. This is basically what Alex was saying in his video too. But we might get a rally here, but a fail rally, and then a test of the bottom. Now, that isn't always the case. You could get a V-shaped bottom as well. Market could just keep going straight up, back up through the cloud. But I'm not willing to take that risk. I'm going to step in here very cautiously. So let's turn to stockcharts.com, where we will look at some charts on the S&P. And I'll spend most of this video on the general market, because I think that's what most of us are interested in. Where do we go from here? Here's a weekly chart of the new high, new low index. I put up the weekly because I want you to see that when this market broke down here at the end of 18, and Alex sent us an email, and he said, look, George, when you see this thing come back up and crosses above that 4,000 minus 4,000 level again, we're going to get a major rally. And of course, that's exactly what we got. Alex is a pretty smart cookie. He's been at this for quite a while too. So here we go on the right side of the chart. This is this long bar we have here from last week. Now we're at minus 41.90 as of Friday. Okay, so if we find support here at what is that 100% retracement we saw, and we start rallying above the 4,000 minus 4,000 level again, it is possible that we could see a V-shaped bottom. I'm not betting on a V-shaped bottom. I think we're going to test the low again, but anything can happen. And I just want to show you what happened in the past. And Alex's research shows that when we get past, if we drop below minus 4,000 and we rally above it again, expect a big rally, and that's what we got. Here's a chart of Apple. Now, you know, I've said in one of my emails to those of you who get an email from me, that as Apple goes, so goes the rest of the market. It used to be GM. As GM goes, so goes the rest of the market. Well, you can see that Apple rallied here from that October level and kept going all the way up. I wrote it most of the way up here, and then I started selling it somewhere in here. Now it may be time to buy it again, but I'm not gonna do that. I'm not gonna try and pick the bottom. I'm gonna see if I could get it somewhere in the middle of the rally, or maybe when we get a double bottom, if we do. Here's the impulse chart, Alex's impulse chart. You can see we have all red candles here. So according to the impulse indicator, it is a censoring indicator, as Alex says. He developed it. He says it tells you what you're not allowed to do. And when the bar is red, you're really not allowed to be buying stocks. So we have red bars. We're not allowed to be buying. And here's a chart of the percentage of stocks of the S&P 100 above the 200-day moving average. Now, I put up a weekly chart because I want you to see what happened in October 2018. And then we rallied all the way up and we did have a V-shaped bottom. Are we going to have the same thing here? Maybe, maybe not. No one really knows, do one? So here's a Shaken analytic chart on SPY, which, as you know, is the ETF of the S&P. So what do we find here? We find that it became overbought here, and money flow was decreasing, and then it became negative, and as the market collapsed here. And you could see we gave back everything we gained from October right here. So now, as we saw in the other charts, so now we're oversold, and it seems as though S&P is rallying a bit here in comparison to the Russell 2000. I believe it's IWV is a 2000. So that is looking healthy. That's a good sign. The only thing is that now Shaken is calling this a neutral rating instead of a bullish or very bullish rating. So consistent with everything we've seen before, we're getting a bit of a rally here from very oversold regions. This is very oversold, and so we can expect some movement up here. The big question is, does it give us a V-shaped bottom, or are we going to run the risk of some kind of resistance here and go back down and make it a double bottom? That's a question we need to answer for ourselves. We don't know. We have a few minutes left, so we'll take a look at some individual stocks. This is Tesla. It made a double high, a double top, and then dropped all the way down. And today it's up about 4% right now, 4.5 or more. And so Tesla may be looking to rally from here. You know, I do believe I want to own it again. I'm not sure where I'm going to buy it, but it's oversold right now. And you can see it's outperforming the rest of the market still. It's neutral in terms of its rating. Here's Adobe. Adobe made a high here, was oversold on this upper channel line, and was oversold here. Now it's overbought, I'm sorry. And now it's oversold. Now it's oversold, so it may be a good buying opportunity. It's up a little today. Let's see what. Here's Microsoft. Very similar. Microsoft was overbought. It became oversold, and now it's oversold, and it's still outperforming the rest of the market. Let me get rid of these here. Still outperforming the rest of the market. So this may be a good buying opportunity to get back into Microsoft. Of course, I got rid of it. I sold just about everything I own. Here's XLK, which is the ETF of the technology sector. And of course, it's now oversold. So if you don't own it and you want to own one of these ETFs that outperform the rest of the market, XLK, it may be a good opportunity here. A similar thing can be said for iPay, you know, the payment systems, Visa, MasterCard, etc. It's now oversold. So if you don't own it and you'd like to buy it, now may be a good time to do so. Again, keeping all the other things that I said in mind, that we might go up and then come back down, make a double bottom. A similar thing as we said for XLK can be said for XLV. You can see oversold, overbought, oversold now, and it could rally from here. Oops. And lastly, we take a look at Apple again, and you can see Apple was overbought. Now it's oversold. So this may be a good time to get back into Apple, but I'm not so sure about that. It might find some overhead resistance. Folks, have a good week, and we'll try and do this again next week.